Hey guys, it is Sterling here from Day Trading Forex Live, and I got a couple setups that I want to talk about. One of them was a setup that we were talking about in the room today. Ended up taking the position later, and I wanted to talk about why. So let's talk about the entry, because the only thing that matters for you guys is taking away something from this video that you can use in your own trading. If you follow Day Trading Forex Live, you know that we focus primarily on the confirmation entry. The confirmation entry is what the 2 years worth of month-end reviews were based off of that you see on the site. Those were all pre-selected levels that we select in the daily market preview. And then the confirmation entry is a mechanical entry, so you know for certain whether the trade was valid from that level. That's one way of identifying market manipulation, and it's a great way to do so, especially when you're learning, because you have a very rigid mechanical rule set. But for those of you guys that understand the confirmation entry and you want to expand beyond that, that's really what this is about. So the pound yen's a good example of what I term as a blow-off type day, where during the New York session, typically during New York, when New York makes a really aggressive move and then completely retraces that move, the follow-through for the next day, so I'm talking about 12 hours from now when the next day starts, what's likely going to happen here with the pound yen, and again, I'm doing this way in advance, but depending on how much downside we get, we'll likely see a little bit of pullback. The market will go into a range, as it typically does, going in between the Asian session into the next day, and then we'll likely get a push up, which will be a false push, followed by the move down. Now that is predicting a hell of a lot going into the next day. I think you guys understand that, but that's what this type of move does for you. Now I've already taken an entry on this, and the trade that I was taking, or the entry on the pound yen, was 143.13. So 143.13, let me just put a line there. And it's not the best entry, but I saw this after the fact. It was 13 3/10 to be exact. But the reason I took it here and I took it at this point, I would have preferred to have taken it right as it was retesting the backside of this support turn resistance. That would have been the optimal entry, but I missed it, and actually the entry must have been over here because I was somewhat chasing that entry as we came back up here, retraced a little bit. But the point behind this entry is, what is the reason? You got to ask yourself this question. When the market makes this aggressive, really aggressive run past the last high, so here's the last highs in place, you don't necessarily know this is going to be a stop run point, and this is what I want to really drive home. You don't necessarily know that's going to be a blowout type move, but what I want you to think about is, what is the reason for that? What occurred during this move? What does this move right here, what is this aggressive pop beyond the highs and even more aggressive rejection back down? What does that tell you? Well, you can phrase it however you want. You can phrase it as there ran out of demand as you push through that level. But the market and these moves in the market, when they're aggressive like that, there's generally an intention behind that move. You can't just look at the move and say, oh, it went up and then it went down, so the market just doesn't like higher prices. Yeah, that's true. But think about how smart money trades. Think about how the largest market participants trade. They induce buying pressure to sell into buying pressure. They induce selling pressure so they can buy into the selling pressure. They cannot simply click buy or sell like you and I can. The liquidity is not there. Even in the Forex market, you drive a massive amount of volume, you're going to spike the price. So when I see that type of move, what that's telling me is that they were actively selling into the buying pressure that was created here. And when it makes a complete retracement of that day's move, that is one of the strongest signals for me for not only that day, but the following day has a very high probability of continuing down. I drew out a heck of a lot. I mean, we're making an assumption on a heck of a lot for the pound yen, and I'll go back over those charts since it's already drawn out. But anyways, the principle is the same. The principle is identical in that what is occurring here is the false push had an intent behind it. The intent was to induce selling pressure. That is confirmed by the price action confirming that. And so now I've seen the manipulation. I've seen what I term as market manipulation, search for liquidity, whatever phrase you want to put on it, I think is irrelevant. The fact is I've seen the false push already. Now the only thing that I care about is where are the highest reward to risk based entries? What's the highest reward to risk based entry I can take? And all I'm going to do in that situation is I'm going to start looking at basic support and resistance. So many times traders like to complicate this. Yes, support and resistance based trading, everybody listening to me has probably failed with it. So I'm not talking about trading support and resistance as in general support and resistance. I'm talking about identifying market manipulation first and then trading off those levels because it gives you a level to risk off of. And I'm going to show you another example of this that we actually were talking about live in the room. This one's live too. It's just, I got to show you the trade behind that. But anyways, when you come back into this floor, I can now risk off that level. What does that mean? Well, it gives me a clear area to place stops beyond. So if I had 143.13 as an entry, I should have had a lot better entry as we were testing up here around the 20 level. But it still gives me something to risk off of. So specifically in this case, I needed a 15 pip stop to get beyond that level and get beyond it comfortably, at least by a few pips. But a 15 pip stop on a 120 pip ADR, which is where the pound yen's at, there's more than enough to still have a really high reward to risk ratio of 2 to 1, 3 to 1, 4 to 1 potentially. The fact is though, you see the stop run, it becomes a matter of not seeing more market manipulation, but now where are your highest reward to risk based entries? That's where it's at, taking it on a first touch. We'll see what happens with this. I'll come back for the conclusion of this trade. And also I'll come back and update what it did as far as the layout of that trade goes and that lengthy kind of discussion we had on the potential for the pound yen and what these type of patterns, and I hate to use the word pattern, but what that type of movement typically creates for the following day. Now, the next thing that we were looking at, this is a pair that we were actually talking about in the room today. We were running our live room on Tuesdays and Thursdays, and well, I was talking about the Aussie dollar, and what I was talking about, we were on a 4-hour chart because really time frame is not that relevant. I mean, you look at the dollar Swiss and take a look at what started the big move down. You have a huge high, you get a big stop run of the high, that's what starts the move down. You go to the pound dollar, you go to the daily chart, big level, stop run of that level, confirms down, starts the entire move to the downside. So market manipulation and these type of stop runs, it's something you can see on any time frame. So it really wasn't time frame dependent necessarily. When I was just looking at a wider time frame, what I noticed was that on the Aussie, we had a clear high. Now it's supported by the 200 EMA, which is always a supporting factor for me. And then what we had is we had a very aggressive pop past that high and an equally aggressive rejection back down. That's telling me that there was likely selling into the buying pressure that was artificially created. Why do I know there was artificial buying pressure created? Well, you break through a high, you're not inducing selling pressure. You break through that high and break through it by more than a few pips, you're inducing buying pressure. By stopping everybody out that got short on the initial sale, you're inducing that type of buying pressure, but you're also inducing buying pressure for those that are buying on the break through that level. So you induce that buying pressure. I don't know it's going to be a stop run, but that aggressive snap back is what tells me it's likely a stop run from that level. And so now all I need to see is pure reward to risk based entries. So that's why I said in the room, as we retest this floor and this floor, it's not really all that clear. But in this case, the last support or last resistance, if we were looking at it the other direction. But you'll notice these two levels, they're really not that far apart. I mean, those 2 points are 2 pips apart. And that's why I was just splitting the difference, calling it 50 in between, and saying with an entry of around 50, you could probably get away with a 5 to 10 pip stop. And I was not taking the entry at that time. I was not taking the entry in the room, as I said. We're right around the entry right now. I did end up taking the entry later after it pulled back a little bit higher, ended up getting a slightly higher entry because it was right on my kind of cutoff point where any higher and I'd be stopping the trade out. That is always a very high reward to risk based situation, and hence why I took the trade. But the principle is the exact same here. There was a major level. The market pushed beyond that level. It made a very aggressive snap back down below it. Now, because I'm assuming I've already seen the manipulation, the only thing I'm looking for is pure reward to risk at that point. So as it comes back in and retests this level, I'm getting short at that point. Very tight stop loss. sitting on this. I personally have a 10 pip stop on this from my entry. That actually got me right up around the highs, so I like that stop. And the fact is, if this thing's going to hold, it's not going to retest those highs more than likely. The probability is that it's just not going to retest the highs if it's going to hold. So if I'm wrong, I get stopped out by retesting the highs. It's likely going to go much further than that. But anyways, 2 good entries there. I'll be back for the conclusion to this one on the pound yen, as well as on the Aussie dollar, maybe later today or whenever I wrap that up. So see you guys shortly with the conclusion to both of those. Hey guys, we're back for the wrap up to this. Sorry I didn't get the video on earlier, but the market just went absolutely crazy with the pound comments, or the comments in relation to Brexit and what's occurring there. And so anyways, we're getting enough correlation to these other pairs where it scared me out of the Aussie. I was looking for a bit larger move because this thing took off in the middle of the night a little more aggressively than I was initially expecting. And I would have expected more downside, and we still very well might see more downside. But you get a big comment like that as soon as I saw the spike, because honestly, I was late to seeing the spike. Going into the, let's just go into the 5-minute chart, you get this reversal here, and you start to work its way back up across the other pairs, across the pound. You're getting this huge surge, obviously, in the pound. And you're probably going to get some trickle over to the Aussie. Now, we are right up against short-term resistance, so if it's going to hold, it's likely going to hold from here. I ended up having an exit at 92, which was a little bit lower, and basically it was just a reaction-based exit. I saw this candle here on the pound when I came back to the computer, and that's your 10 o'clock candle. That thing was spiking huge. You go over to the Aussie, and your 10 o'clock candle is right here. So when I came in, I have a picture of this huge candle pushing the other way. Look at the news. Because you will typically get some trickle over, for me, that was the concern, and hence the reason behind that exit. But honestly, I got more out of it than I was looking for anyway, so I'm not going to be too concerned. With an entry of 52, which is what we were talking about yesterday, as I was taking the entry, well, actually, I was talking about around 50, but the same difference there. From that price to 92, you can see you have a nice nearly 60 pip profit, and on a initial reward to risk ratio of 10 pips, or excuse me, an initial stop loss of 10 pips, that's an actual reward to risk of 6 to 1. You could win 30% of those trades. Now it's it's an above average reward to risk ratio, but the fact is it illustrates that you could win 40% of your trades, 30%, and still be doing very well. I'm not saying that you should be looking to do that. I'm just saying that based on that reward to risk ratio, that's why I focus so much on reward to risk. Okay, so for the conclusion of the pound yen, I had 2 trades over the last 2 days that got within about a pip of hitting my take profit, and the pound yen was maybe within a couple tenths of a pip, because as we were talking about yesterday when we took the entry on this, I had chased it a little bit, which is why my entry was 13 3/10. But as I mentioned, because I was chasing it a little bit, I had to have a 15 pip stop on this position, which put me up well above the highs. And the way I felt is if that was going to hold, then it was likely not going to be retracing back beyond that, given the strength of that reversal. So we got the move down that I was looking for, and from that entry, you can see here, you run down, you hit just a touch over that 30 pip barrier. But that's your bid. That's your bid price. So you got to factor in the ask, and I must have missed by a few tenths of a pip. So anyways, with that miss there, it's a little unfortunate, but it is what it is. I'm not up at that time. Would I have closed it out anyways? Well, it's a Monday morning quarterbacking. I'm not going to say I would or I wouldn't have. It's very unlikely I would have anyways, because you didn't really have a big sign of reversal at that point. You just had the market push down and make the rejection up. So very unlikely I would have done anything other than watch that trade come back to break even had I been sitting there. And that'll do it for this video. I hope there's something you can take away from it on the entry. If you have any questions, feel free to shoot us an email at support@daytradingforexlive.com or check out the website, daytradingforexlive.com. There's a ton of free info and videos on the site. 2 years worth of track record when I ran it from 2015 to 17, running month-end reviews, going through every trade that we had placed based on the confirmation entry. Again, just a ton of information, and obviously the actual bank trading course, what's included with that, and more info. So again, if you have any questions, shoot us an email, check out the site. Hope you enjoyed the video. See you back for the next one. Till then, happy trading.